Hi everyone, Michael McVitie here today. I'm here to talk about 10 tax deductions that every landlord should know about. So, whenever you're looking at buying a real estate investment property, these are things that really you should know about. I know that a lot of real estate people have a tendency to focus on how much rent you might get on a seasonal or an annual rental, but honestly, these are really, really important factors. One of the many things that lead to better cash flow for your rental property. So, without further ado, let me share my screen. And here we go. So first of all, like I said, we're going to talk about 10 tax deductions every landlord should know about. I am not a tax attorney, but I do understand the real estate taxes, and also I helped a lot of real estate investors buy residential properties. I'm Michael McVitie. I'm president of Red Fortress Property Management. A couple of things about me. I'm a master property manager. That's a designation given through the National Association of Residential Property Managers. There's about 200 in the nation. As I mentioned, I'm president of Red Fortress Property Management. We're a nationally certified residential management company, and there's only 43 right now in the United States. We manage rental properties for about 150 clients. I've been a landlord and property manager for 25 years. And among other things, I used to be former state president for Florida property managers. So let's talk about 10 tax deductions real quickly. Every landlord should know about. Okay, so first of all, one of the things that you need to know about is that this is coming from publication 527 by the Internal Revenue Service. So you can look this up, and there's actually more than 10 actual tax deductions. But I said useful because some of them it might not be as applicable to you. Like, for instance, you can write local transportation expenses off or utilities. Okay, fair enough. Those are all valid points. Maybe if you take a bus to get there, or you're paying utilities because you have a short-term rental or something like that, that's great. But again, it's the top 10 things. Okay, so first off, let's take a look at the first one, which is mortgage interest. Okay, so remember, it's not principal but mortgage interest. So if you have a mortgage on the property, and again, if you're getting a 30-year especially, most of the payments that you're doing for the mortgage can be written off because it's interest, not principal, going towards it. So first one, pretty big one actually, is the mortgage interest can get written off. Second thing is huge: property depreciation. So if you buy something, as an example, for 200,000 and you're turning it into a rental property, you get to write off 3% a year. That's $6,000 that you would mark down from your income tax. So if you made, say, for instance, 50,000 a year, that alone would mean that you wouldn't get taxed on 50,000. You would get a $6,000 write-off. So you would be taxed only on $44,000 of your income, as an example. Okay. Third one, repairs and maintenance. So when you have situations like roof repairs, dishwashers, that sort of thing, when you're talking about landscaping, all these repairs and maintenance are able to be written off against the income of the property. Number four, huge now, insurance premiums. Our flood insurance has really skyrocketed. Obviously, we've had several hurricanes recently in our area, unfortunately. And so the insurance premiums are getting more expensive, whether it's to the deductible for floods, your roof expense, that sort of thing for hurricanes. All of that could be written off. Number five, property management fees, leasing fees, commissions. So if you were to hire somebody like ourselves, a professional property manager, to take care and manage your property, all of our fees, our management fees, leasing fees, whatever commission there is, you get to also write that off on your taxes. Okay, we're halfway through. Number six, legal and professional fees. So if you have somebody like a tax accountant prepare your taxes for your Schedule E, which deals with your rental properties, all of those fees are able to be written off because you need those services with regards to managing your rental property. Number seven, advertising costs. So if you're a landlord and you make a sign, especially a specialty sign, for things like in an association that you need, a certain type of sign. If you're advertising on the internet, you're putting it on 3 websites, whatever the case is, all that is tax deductible because it's operating a rental property. Number eight, your property tax is another huge one. So again, as in so many of our areas, our property taxes are going up. That doesn't necessarily mean, by the way, that your value of your home is going up. Sometimes they change the millage rate. So as your property goes down in value, the millage rate goes up. So you're still paying the same amount of taxes somehow. So your property taxes are also tax deductible. Number 9, furnishings. So if you decide to do a short-term rental and you want to obviously furnish it, because most of the short-term rentals are, these are another tax deduction. Now, again, you want to do it all in the same year. It's something that if you buy all the furniture in 2024, that's the year that you would normally write it off in. And then finally, the association dues. So if you're in a homeowners association or a condo association and you pay quarterly or monthly, those are obviously expenses. If you get a special assessment, that's also a tax deduction against your taxes. Okay, so those are 10 most useful tax deductions that you get as a landlord, and you should really use them. A lot of people don't think of some of these, and it's going to hurt your cash flow. So first of all, thank you for watching. Remember, these tax deductions help make you more money, both in cash flow, that's income minus your expenses, so you're increasing your expenses, and it's also going to save you money, such as lowering your income tax that you file annually by depreciation. Hey, maybe your expenses are higher than your income, you still get to write that off, and you would be paying less taxes. If you have any questions or thoughts on this video, even another topic, feel free to email me at mike@redfortresspm.com, mike@redfortresspm.com. Hope you have a great day, and I hope this was useful for you. Thanks.